Good morning and welcome to the deep dive. And what a morning. As we're recording August 11th, 2025, Bitcoin just blasted past $122,000. I mean, that's a really significant marker, especially in a year that's been, well, let's just say anything but predictable for crypto. So our mission today, as always, is to cut through all that noise for you. We've gathered a whole stack of key sources, the Crypto.Report newsletter, some really deep analysis from Benjamin Cowan, Bankless summarizing Vitalik Buterin's latest thoughts, plus other critical crypto headlines. We're going to try and pull out the most important nuggets, the key insights, so you can quickly get a solid handle on what's actually driving the market right now.
It's tempting to just stare at that 122K figure, right? But the really fascinating stuff is deeper. There are these underlying forces. We're talking institutional moves, shifting narratives, even these big long-term visions for what digital assets could become.
Exactly. It's not just the price tag. So let's dive right into that surge, $122,000. What are our sources telling us was the main driver? And why is that maybe more significant than just, a number going up?
Okay, so the key thing popping out from the reports is this wasn't just like retail FOMO or a load of leverage. The big engine was Binance spot trading.
Spot trading. So actual buying of Bitcoin itself.
Exactly. Not derivatives, not futures, but people actually buying and holding Bitcoin.
Yeah.
It suggests the bigger players are, stacking sats in a serious way. And that's typically seen as a really bullish sign for the foundation. It points towards long-term conviction rather than just quick speculation.
Okay, long-term conviction.
Plus, there are these whispers, hints in the reports about possible insider positioning, people getting set ahead of what looks like a really packed week.
Insider positioning, huh? Interesting. And yeah, speaking of a packed week, the analysis we looked at maps out a whole minefield of potential market movers coming up. So Tuesday, we've got two big ones, right? The U.S.-China tariff pause deadline could be an extension, maybe even a bigger deal.
Could be, or it could fall apart. Uncertainty there.
And also Tuesday, U.S. CPI, inflation numbers, if that number comes in hot again.
Then those rate cut hopes might get pushed back again, which the market probably wouldn't love.
Right. And that's just Tuesday.
Exactly. The rest of the week, more jobs data, corporate earnings are still rolling in, and then you've got speeches from multiple FOMC voting members,
right.
The Fed people who actually decide on rates.
Always important to listen to them.
Always. But then the kind of wild card is Friday. That Trump-Putin meeting scheduled in Alaska discussing Ukraine.
Okay, that feels potentially significant, even if it's not directly crypto. Geopolitics can ripple out, can't they?
Absolutely. High-stakes talks like that create uncertainty across all global markets. And uncertainty often fuels volatility, especially in assets like Bitcoin. So yeah, it's a very high-stakes backdrop for this price action.
So big money conviction, plus a macro scene just primed for potential swings.
Okay.
But there's another really fascinating thread in our sources, this intensifying supply crunch. Crypto supply on exchanges just vanishing.
It's quite striking, actually. The numbers are pretty stark. Ethereum ETH, its supply on exchanges is down to just 12%. That's the lowest it's been since July 2016.
2016. Wow.
Yeah. And Bitcoin, its exchange supply is at 14.5%, lowest since August 2018.
Okay, so what does that practically mean? Less supply on exchanges.
It strongly suggests, again, that long-term conviction, reduced sell pressure. People are pulling their coins off exchanges, likely into cold storage, offline wallets they control directly.
Like locking it away in a vault.
Pretty much.
Yeah.
It signals a holding strategy. They're not planning to sell anytime soon, which, makes you wonder what price targets they might have in mind if they're holding this tightly through surges like this.
That supply crunch definitely feeds that long-term conviction story. But let's talk about the bigger picture narrative. One report called this the market's curveball year, said it's totally defied the script. How so?
Well, think about the standard expectations people had coming into 2025. Maybe Q1 strength, that pullback in spring, choppy summer, strong finish in Q4. That was sort of the playbook many expected.
Right.
But the reality? Q1 was weak. Then Q2 suddenly turned strong. And now Q3, we're still climbing. It's completely flipped.
And within that, specific coins have defied expectations too.
Hugely. Solana, remember, everyone thought it was king for a while. Now it's struggling, relatively speaking. Meanwhile, Ethereum, which people were declaring dead just months ago, is absolutely flying. So the key insight here seems to be this isn't like 2021 where everything pumps. It's much more selective. A sniper's market, you could say?
A sniper's market. Okay, that makes sense. So if it's harder to navigate, what does that mean for the age-old question? Is it altcoin season yet? Or when might that happen?
Yeah, good question. Bitcoin dominance is slipping a bit, But the analysis suggests that's mostly because ETH is rallying so hard, not because, dozens of smaller alts are taking off.
So ETH is sucking the oxygen out of the room almost.
In a way, yeah. The sources seem to suggest a real broad altcoin season where money seriously rotates out of the big caps into smaller stuff might only kick off once Bitcoin pushes firmly into that, say, 140K, 150K range.
Okay.
And critically, once ETH breaks into fresh all-time highs and maybe consolidates a bit, then traders might feel confident enough to rotate those profits. Until then, it feels like BTC and ETH are still running the show.
Right. BTC and ETH lead the charge. Got it. Okay, well, speaking of Ethereum, it's obviously a massive part of this story right now. Let's dig into Benjamin Cowan's analysis. He had some specific thoughts on why ETH managed to break $4,000 this time.
He did. Cowan pointed to a few key things. First, he noted that ETH essentially bottomed out against Bitcoin. The ETH-BTC ratio hit a low point. And he highlights that this pattern looks similar to what happened before major ETH rallies in 2016, 2019.
So a historical pattern repeating.
Potentially. Second, he talked about ETHs going through what he calls a going home correction. It's a cool phrase. Basically, like the market resets itself, shakes out weak hands, finds a solid base, and then rebuilds momentum more genuinely.
Okay, a reset.
And third, crucially, he argues that altcoins have just been bleeding value into Ethereum, money flowing out of struggling alts and into ETH, fueling its strength relative to everything else.
Interesting. So building on that, what does Cowan see potentially coming next for Ethereum? Does he offer any predictions?
He does lay out a possible path. He suggests ETH could make a push towards its old all-time high that's around $4,867 maybe in the next week or two.
Soon then.
Yeah, relatively soon. But then he expects a September pullback, maybe back towards that $4,000 level we just broke.
Okay, so not straight up forever. A breather.
Exactly. He thinks that kind of cooling off period is actually healthy. It could set the stage for a higher market cycle top later on. He also mentioned that money might rotate back into Bitcoin for a bit, maybe after late August. So perhaps a temporary shift in leadership.
Okay, so let's recap Cowan's take. Right now, definitely Ethereum season. ETH is the star, outperforming Bitcoin and most alts. But don't expect that broad altcoin party until ETH maybe takes that breather he mentioned in September. His advice seems to be ride the ETH wave for now, brace for a potential dip, and then look for the next move up.
That sums it up pretty well. Ride the leader, basically.
All right. Now, we've talked a lot about ETH's price action, its momentum, but our sources, especially the Bankless summary, also touch on something much bigger. Vitalik Buterin's long-term vision for Ethereum. This goes way beyond market cycles, right? This is about fundamentally changing things.
Oh, absolutely. This is the grand vision stuff. Vitalik's ambition, as Bankless puts it, is for Ethereum to become essentially the main place the world keeps records of value.
Records of value, so not just money.
Not just money. Think property titles, contracts, identity, maybe even voting systems eventually. And the key is doing this without needing traditional intermediaries like banks, corporations, or even governments to act as guarantors.
Okay.
Instead, the whole system is secured by math, by cryptography and code that anyone, anywhere can inspect and verify. Trust through transparency and wrath, basically.
That's a huge idea. And does he have concrete steps for how to get there? Bankless mentions some goals for the next decade.
Yeah, they outlined 5 main goals Vitalik is focused on. First, built-in privacy, making private transactions just a normal feature in your wallet, not something complex you need extra tools for.
Okay.
Second, scaling without centralization, handling way more users and transactions, but crucially, without letting a few big players take control of the network. That's a huge technical challenge.
The decentralization aspect is key.
Absolutely. Third, layer 1, the main Ethereum blockchain is the anchor, keeping that base layer incredibly secure and reliable as the ultimate source of truth.
Right.
Fourth, simple self-custody, making it genuinely safe and easy for average people to hold their own crypto without relying on third parties, which, frankly, it isn't always right now.
True. It can be intimidating.
And fifth, proven secure code, using formal verification, basically mathematical proofs, to show that the core smart contracts and systems are secure and won't break or get hacked.
Okay, that's a very ambitious roadmap. So let's bring it back to the listener. Why does this grand vision matter to you? What could it actually mean in practice?
Well, imagine a world where you could send money to anyone, anywhere on the planet, in seconds, for maybe just a few cents in fees.
Okay, that sounds good.
Imagine you keep full control over your savings, your digital assets, your identity, even if a bank collapses or a platform you use goes offline or tries to censor you.
Right. True ownership.
Exactly.
Right.
Imagine using apps where your data privacy is built in automatically, not something you have to fight for. Bankless used a great analogy. If Vitalik's vision works out, Ethereum could become as normal and reliable as like running water, but for your digital life, an invisible, ubiquitous layer for value and information.
Running water for your digital life. That's a powerful way to put it. Puts the current price action in a much broader context. All right, so shifting gears slightly, let's look at some other specific news items that kind of highlight this trend of adoption and institutional movement that's happening now. We saw reports about a crypto treasury firm linked to the BNB network kicking off a huge $500 million BNB buying spree. They've already bought $160 million worth, which, interestingly, is also sparking some debate about centralization around BNB.
Yeah, that's a side debate, but the sheer size of the treasury move is notable.
Definitely. And then there's Bitmime, this huge Ethereum treasury player. They just added another $1.3 billion in ETH. They now hold something like 1.15 million ETH, worth nearly $5 billion. And they explicitly cited growing institutional adoption as the reason.
Wow, $5 billion in ETH on one company's balance sheet. That's serious.
It is. Then a different kind of item, World Liberty Financial, or WLFI, which sources note is backed by the Trump family, is apparently seeking $1.5 billion to set up a public treasury company specifically to hold its own WLFI tokens. We're just reporting the fact here, of course.
Understood. Another example of seeking large-scale capital for crypto treasury purposes.
And finally, on a national level, El Salvador just passed a new law. It allows big traditional investment banks to actually hold and offer Bitcoin services directly to their high net worth clients, anyone with over $250,000 in assets.
Okay, so pulling all those different headlines together, what's the collective takeaway? I think it paints a pretty clear picture, doesn't it? We're seeing undeniable, accelerating trend of digital assets being integrated into traditional finance and corporate strategies.
It's not just theory anymore.
Not at all. You've got companies building massive crypto treasuries. You've got nations creating legal frameworks for banks to handle Bitcoin. It shows a real shift from, crypto being a niche interest to becoming part of the broader financial landscape. The foundations of that digital economy are actively being built right now.
It really feels like things are moving fast. Okay, so let's try and wrap this deep dive up. What does all this mean for you trying to make sense of this market? We've seen Bitcoin make this huge move to 122K, driven by what looks like serious institutional spot buying. We've talked about the supply shrinking on exchanges for both Bitcoin and Ethereum, hinting at real long-term conviction.
Right, the holding pattern.
We've explored how this year is a curveball, defying simple stories, making it more of a sniper's market than an everything up market.
It's definitely trickier to navigate.
And we dug deep into Ethereum, its current strength as a market leader, but also its potential role as this foundational layer for a whole new digital future based on Vitalik Buterin's vision.
Yeah, that dual role is key for ETH right now. So considering all these different threads, the short-term macro events, the geopolitical tensions creating volatility, but also these huge, ambitious, long-term technological visions, this deep dive really highlights how the very concepts of value and ownership are evolving in this digital age. It makes you think, doesn't it? So maybe the question to leave you with is this. If value can be secured purely by math and code, transparently, without traditional gatekeepers, what does that truly imply for the future? Not just for finance, but for how we organize ourselves. And how might you continue to explore what that means in this rapidly changing world?